Groupon setting its sights on China. CEO Andrew Mason is in China for his first visit. With more on the challenges ahead for the social media coupon company, we bring in Bloomberg contributing editor Paul Kedrosky. He is a senior fellow at the Kauffman Foundation, and he is with us now by phone from San Diego, California. Paul, thanks so much for joining us this morning. Andrew Mason's trip to China, is this about supporting the IPO? Is it about seeking out local partners? What's the main motivation?
Well, it's all of the above, really. But I mean, I see it, for the most part, more as the former right now. I mean, the company's really doing all it can to pull out the stops to support the IPO right now. And one of the ways they can do that is show that there are more tricks here than the core business that we've seen from Groupon in the United States. And so one of the tricks it wants to show is that there are other geographic markets that can support, the kind of growth and the kind of opportunities that are sort of inherent in the multiple and in the valuation that are sort of suggested in the S1 in the prospectus. And so that's hence the China trip.
Paul, you speak about highlighting their potential success there. I mean, they have a lot of competitors in China and not quite the same model as, let's just say, a Facebook where friends and family are already connected. How is Groupon going to deal with the 2,000 plus competitors that they have in China?
So the plus side of going to China for them is that, if you think about the Groupon model, it's really about trying to get people to try out new suppliers of different services, right? So it's trying to break your current attachments to the current brands that you favor. So if you think about the evolution of the Chinese market, it's really a nascent consumer market. So there aren't the same attachments to brands yet in that marketplace that there are, say, in the United States. So as a result, I'm somewhat more optimistic that they can actually get consumers trying new brands by offering them discounts and doing the kinds of things that they do. So that's the positive side of it, is that there isn't that same attachment to brands. But as you say, the bigger problem that they have is that as they go into that market, the fact that they've been successful in the U.S. really buys them nothing. They're going to head up against existing competitors as well as people who clone them directly, and they have no advantage from having had scale in the U.S. already. So, it's really kind of a wash right now how much they bring to the table just for that reason. So the risk that I think is probably the most material one for them is that they simply go there and they just get cloned. I mean, and that's, I think, a very real risk. It's nothing they can really do about it, but I think that's what they face as they go.
Paul, before the break, you said you were worried about cloning for Groupon, the fact that Groupon goes to China and then a lot of local Chinese companies basically copy Groupon's business model, their practices, and as you say, there's not so much brand loyalty built in yet. There's a lot of questions even about how Groupon does business in the U.S., how it's going to get around liquor laws, for example, coupon laws. Are these issues for Groupon in China as well?
No, not as much, really. It's much more of a little bit more of a Wild West in terms of how they can operate in the country. So some of those restrictions in terms of the jurisdictional staff and some of the restrictions with respect to what they're actually offering coupons on, there may turn out to be problems, but they aren't ones that you can really identify up front because those same regulations at least don't exist or don't have the same force as they do in the United States right now.
Paul, it's hard to talk about Andrew Mason's visit to China without thinking of Mark Zuckerberg, the Facebook founder and CEO. I mean, he had a very successful visit from a PR point of view. Can Andrew Mason pull off the same thing?
Sure. I mean, Andrew, I don't know why, but for some reason he's gotten pilloried a little bit lately as being somehow, almost a flake, as if he's he might show up in a chicken suit or something when he arrives in China. And he's not really that way at all. I mean, he's a free spirit and he's a very entertaining guy, but he's also very smart, highly charismatic, and he can carry this off. So I have no doubt about that side, about his ability to go there and be successful. He'll be successful in his own way.
I mean, Zuckerberg says he was taking Mandarin. I mean, he really did a great job.
Yeah, I don't think you're going to see Mason doing it that way, but he'll do it his way, and I think he'll do fine. The deeper problem for me is the one I alluded to earlier, that Facebook going to China, they're building on the strength of, we need to build a presence here in China because you've got all friends and relatives in the U.S., connect to our service, it'll be good for you. That doesn't apply to Groupon. Just because you've got Groupon successful in the U.S., you can't say now, let's build out in China because our U.S. success makes the Chinese service that much better. That argument doesn't work.
Paul, you just raised an important point because it points out actually something that Andrew Mason said in an interview with Charlie Rose. He alluded to Groupon as being the NSYNC of websites versus the Beatles of websites. Does that mean he doesn't even see Groupon being independent in the next 3 years?
Well, let's say this. It wouldn't surprise me, and certainly many of the actions of the company's principals over the last, say, 12 months suggest that, they're at least aware of the chance that this thing is growing very quickly but may not be around that long. If you look at, for example, insider selling during one of the last funding rounds earlier this year or insider selling around the IPO, and some of the statements from principals like Kedrosky and Mason, they would all bear out what you're suggesting, and certainly that's my view of the company. I think the company is going to come at a multiple it can't support, will likely trade down over time, and within the next, say, couple of years, will probably find itself in some kind of combination with someone else who's got how should I say, a bigger, better balance sheet and a bigger footprint.
Paul, we thank you so much. Paul Kedrosky joining us there. He is a Bloomberg contributing editor, saying he does not think that Groupon will remain a standalone company, and he says in the next couple years is likely to be bought by a bigger company with a stronger balance sheet.